Guys, we'll get started here. First of all, thank you guys for coming in. So, Mosen, we're pretty much ready, right? Okay. Okay, great. Then let's go and get started. So today's topic is going to be primarily involved in market structure and identifying the proper range. So then you can basically spot breakouts, or potentially you can kind of look into, what kind of range you'd be trading in. So then you have better ideas and concept about how to find entries. So let me pull out my trading view here. Earlier, I was just looking at USDT.D because we had a big move just suddenly. So if you guys see my screen, let me know. Can you guys see it? The audience is dead today, huh? I don't know if you guys can see it. Can you? Okay, cool. All right. So this is USDT.D, right? Obviously, is the market dominance. So meaning that the more it goes up, the more money is being translated or transferred into USDT. That usually is primarily the rest of the market is probably dumping. On the contrary, if it goes down, right, the rest of the market is pumping. So if you're looking at the current trend line, drawing from the previous low, and based on this point of the next previous low, right? So if you look at it, there's really two segments here, right? There's a segment between here and here. And let me just put in the right box. So there's a segment between here and here. And then there's another segment as it kind of broke above here, right? So this is the second point that I use. So if you're saying, well, why not this point or this point? There's one way you can decide that. Another way you can decide is basically looking at the bottom of the wicks, right? So it depends on the wicks, the bottom of the wick. So we have a zone here, that's been taught previously, so I won't go over today, but we'll eventually circle back. So there's a zone here, and based on the Fibonacci level of retracement from this low point on the trend line to the height, we can see that, we have recently in this 4-hour trade chart, we have surpassed the 618 at this point. We haven't closed yet, but it's likely that will probably hit this potential support resistance and come a little bit further down for the 786, which is a deep pocket, right? So if we hit the deep level, potentially we can get a reaction based off this trend line and rebound. So if some of you thinking, okay, well, the dump is probably over, we're gonna go on full pump mode now. I will probably wait twice, right? I will probably wait before we celebrate, because there's a lot of confluences suggesting that the trend is still bullish for USDT dominance. And that means we're still dumping, right? Because the trend hasn't really break the bullish trend. The first thing it has to do to break the bullish trend is this green trend line right here, right? Again, drawn from the low to the lowest point of wick. Really, all you need is 2 touch points. The more touch points, the more valid. But usually you just need 2, right? Just to kind of determine a idea about, what the trend line is. And you also want the angle to be not more than 25%, right? So this is a 14-degree angle. And this angle tool you can find also from the toolbox. I'm not sure which one of these. Let me just check real quick. Oh, okay, so it's the second toolbox. It's under the trend angle, right? So you'll be able to identify the trend angle. Depends. But if you shrink or expand, the trend angle changes. So you also kind of want to decide how you want to do that. But anyways, so once you have the trend line established, is the first thing we need to break is we need to close below this greenish trend line in order for this trend line of bull trend to be considered broken. So that's the first thing. The second thing you need to break is this line right here. So this is basically the lower point. if we were to close below this point, then it would be a full-on change of character. So then I would officially call the dump over as soon as we kind of break below this and retest it and actually start going back down. And I have drawn this stop loss right here, which is really where I started to consider the bull run has officially started, right? Based on this zone right here. So if we were to close below here, then yeah, I'll probably do some CMP here because the actual bull trend is about to start. But right now I'm still wary about, potential dump higher because we have, higher lower highs, higher highs, right? So basically we have the structure still holding very strong. But this is just me kind of explaining to you guys what the market is doing right now. So pay attention because the dump might not be over yet, even though we have a temporary relief. So that's that. Now let's go ahead and kind of look at a coin. So if you guys have a coin you want to look at for today's class about structure, let me know if there's a coin in your mind that you want me to kind of take a look at to demonstrate the structure with. CRX? Okay, sure. So let me go to practice. ZRX. Okay. All right. So the very first thing you do depends on your swing or scalping. If you swing, I usually just go to daily, hold it out. And then the first thing you want to identify is a trend line, right? So looking at this right now, from let's say this very obvious low point right here as a zone, right? So if I were to draw the zone out, this kind of looks like what the zone looks like. So we have a zone around this area, and this was the low point of the zone. So this would be my initial point for the trend line. And then the lowest point, the lowest wick of this entire area, right? So that would be my initial trend line. Meaning that if we were to have price fall below this area, it could be trouble, right? You can also try to kind of, play around with the trend line to see if you can get more touches. And sometimes if you get more touches, that could potentially be a more kind of like a more solid trend line for this example, right? We have a little bit more touches here. So we have 1, 2, 3, almost 4. And here's pretty much almost 5. And you'll see that we never really closed below this trend line right here, right? We bounced off right at this trend line. So this would actually also be a confirmation that this trend line is probably more valid, right? So let's say we draw the trend line like this. So now we have basically a kind of like a understood bottom. So if we never really break below this trend, I wouldn't call this bull trend off. So that's the first thing we know. Second, in terms of market structure, right? The basic of market structure is very simple. You have the original point, and then you have your first high, and then you have your first low. So this is basically a standard market structure. And then from here onwards, until you break and achieve a new higher high, the structure was never really confirmed, right? So there's no extra information here. Because if you kind of just go up here and you never really broke the previous high, then you're still just simply ranging between these points. So if you're ranging between these points, the structure is not established, right? So what you're looking for is potentially to make sure that you have some sort of breakthrough, okay? So this week, again, original point, we have first high, first low, and then we have a higher high, and then we have a higher low. So this is then a confirmation of a bullish trend. The moment we go below our previous lower low or the previous low, this is what we call the change of character, right? The moment we closed below, then that means, okay, the bull trend has now reversed, right? But be careful. You also want to make sure that potentially you want to check out some sort of retest, and this will be a retest, right? And through the retest, you want to see if the continuation is going downwards. So if you kind of look at it, we have our original point right here. So this becomes the new original point, right? So you have your very first high, or in this case, first low. You have your high, and then you have your lower low, and then you're going to have your lower high, assuming that we don't break through this point, right? If we break through this point, again, that will be another change of character, right? Because we're no longer following the lower high and lower low, in terms of that structure. Okay. Any question about what I meant by this? The very simple of the structure explanation. And if you guys don't respond anything, I'm just gonna ignore. I just assume that everything you say is a yes, right? This is a great opportunity for you guys to ask questions. So don't miss out. Feel free to ask questions, participate. The purpose of these live streams is to help you learn and make sure that you can actually see the market charts and do your own technical analysis the way you see fit, and to learn the knowledge where you don't need to depend on purely signals, right? So if no questions, then we'll move on to actually looking at the chart. Okay, you're welcome. So looking at the chart, if you're looking at this, we obviously have a huge, momentum. But this momentum is kind of like slowly degrading. So there's really two parts to this momentum, right? So our initial point, you can call it, let's say here, the lowest point. You have your first high, and then here is kind of like your first low is like right around this area, right? And then you have your higher high, higher low. Why would I draw on the same candle? Because this is a daily candle. Meaning if I go to 8 hours, if I just back it out, this higher low is actually a separate candle, right? So it doesn't necessarily have to be incredibly separated as long as it's being established correctly, right? So you see the original low, and this is the higher low, right? There is a separance, there's a difference, right? And then continuing on, you have your higher high, higher low, right? So you're basically, even though this trend structure looks pretty ugly, right? Or pretty bad, but is still undeniably a bull trend based on just the structure where they are. And then obviously you then have the crazy impulse. You have the, again, higher high, higher low. But then at this point is where then we start to establish some sort of a bear trend, right? Because then we never really have another higher high. From this point, we never broke above here. Instead, we started closing below over here, right? The previous swing high. So now you know there is a huge support resistance, or in this case, resistance at this swing high, because we haven't really been able to get up there. There's also a lot of liquidity. So I expect if we were to have a crazy bull run, we'll probably run up here and have some sort of reaction. It probably wouldn't come back down here, but it would almost certain that there's some sort of reaction. So potentially what you can do is you can take TP here, right? Take some TP while we're at the top, and then potentially buy back during that reaction. It's a risky move, yes, right? Because potentially we can also break directly through. Can we do that? Sure. If you look at this impulse move, that's where, where people says in the market anything is possible. So everything you do is involved with risk. And therefore you don't want to do everything show hand, right? Simply by show hand is doing maximum of everything. Let's say you have $100 or 100 CRX coins. You don't want to sell all 100 coins at this level just because you anticipate some sort of reaction, right? You wouldn't do that. But you can potentially sell 30, right? So you still keep 70. You sell 30 here. If it does come down, then you would just use the money you made with the 30 and basically buy a whole bunch more here. And how do you decide, how much it can potentially go down? That's where Fibonacci becomes very handy, right? So if you go to the low swing lows and you go to your swing highs, so then you can basically have Fibonacci levels where then you can start to make sense, right? So I already kind of talked about this where we have very shallow levels at 236, our typical shallow level at 382. And simply by shallow meaning that there's a pretty high probability of some sort of reaction, but usually the reaction is not significant, right? So if we were to rebound from here, you're probably not going to see a significant impulse. maybe somewhere around here, and then just try to bounce again, and then try to go again, right? So that's what shallow really means. But potentially, if we go down deeper or deeper, right? So these are all potential buyback points. So you wouldn't really kind of just buy everything back the moment it hits, let's say, a shallow line. You kind of want to watch what the market is doing, right? So that's why it's very important to understand the market structure. And once you have identified the market structure, then you can make better decisions, right? So, okay, we know coming back to market structure. So we have the swing high, and then we started closing lower, right? So this becomes our new original point, and we have our first low, first high, lower low, lower high. So that becomes a very significant and clear bear trend. But remember, this is local, right? Meaning in the macro scale, this is not quiet. Um, Basically, it is not the end of the world, right? It's just in the local scale, we're currently on a downtrend. But we never really broke below this original green trend line, meaning that the overall macro meaning the overall scale of the market of this particular coin, we're not really in a significant downtrend or bear trend because we never really broke below this trend line, right? So that's very important for you to understand and realize. Okay. So potentially, what could happen from here? Well, if you look at the price development, it's very clear that the price has kind of been dancing around this area, right? So this is a very obvious support resistance right here. So let me just mark it in support resistance. So potentially we have a double bottom here. Usually double bottom potentially can lead to a, some sort of uptrend. We can retest this trend line to see whether or not I want to break through it. Depends on, USDT dominance, or depends on what the BTC is doing. And also depends on the correlation between ZRX and BTC, their dominance levels, and their pair. So there's a lot to consider to see how far this would go. But if we're just kind of considering ZRX by itself independently, looking at the chart alone, here would not be a terrible idea to entry, simply because we have a, some sort of thesis that potentially we can bounce off this resistance into the next level of swing. So in this case, will be here. And then the next level would then be here, right? And then the next level would then be here. So then these are like the significant levels where, price basically had a swing, meaning that there's some sort of liquidity here and you can expect some sort of reactions there. So as we continue to go, if you were to get in here, I'd probably sell some here. So these are great TP points. So I'll probably sell a little bit right here, probably sell a little bit right here, and probably sell a little bit right here until we break through here and then go to a new high. I probably sell a little bit there as well. And I always have a bigger bag for the longer term, right? So imagine this impulse if it were to continue. So just kind of based on the size of the impulse, if we simply pull this over, potentially we can actually reach maybe $2.50, right? We're currently sitting at about 48 cents. So looking at this, that would have been about a 450% move. So that wouldn't be a bad idea to keep some long-term bag just to sell when the price is much higher. So I wouldn't sell everything within this range. You can see very clearly that I have basically designated a trading range, right? And therefore, the class or the lecture is kind of named after, understanding market structure, understanding the range you should be trading in, understanding what constitutes a breakouts, right? And how to determine whether or not it's a fake out or a breakout and confirmation. So this is basically what are some of the things you're looking for. Okay. Now these are all theory. So let's go ahead and kind of choose. It's very hard to do live trading because sometimes live trading really takes a while for the price to develop to a certain point. So what I'll do is I'll do a replay just at a random spot. And then instead of using daily chart, I'll just go to 10-minute charts. So then, there's a little bit more movement. Okay. So this is 10-minute charts based on January 12, 2024. There's no price action after this. I don't know what's going to happen after this. So we're just going to basically do a quick read based on the trend lines, based on the market structure we mentioned today, and let's see how it plays out. You guys follow me so far? All right, does that sound good to you? Okay. So the very first thing we'll do is we'll draw the basic trend lines again based on the lowest points. So that's the trend line I'm watching out for, right? So if the price were to develop below this line, I am a little bit more wary, a little bit more worried. Okay, so that's the trend line. If I want to see the upper line, then I can maybe go to 30 minutes. So I have a little bit more data. Again, from here to here, I can probably use this line for my upper line for a potential breakout. And you'll see it kind of magically almost lined up, right? Do you guys see that? Kind of interesting. How these 2 points magically almost lined up with this point. Very interesting, right? So that tells you, even though we're just connecting dots or drawing lines on the graph, they do have some correlation. Okay, and the better you are, the better you get. The more experienced you are reading these charts, the more you'll see the correlation between them. For example, here we have a proper breakout. And the breakout actually probably happened somewhere around here, right? So even though we have a incredible amount of wick right here, based on the 30-minute trend, I'm sorry, 30-minute time frame, but we never really closed above it, right? So the basic understanding of candle, you kind of have to really know this to be able to read this movement correctly. So when you have a red candle, in my case is white, right? When you have a downward candle, the upper close is really the open, right? So this is the open of this time frame. But because there's a huge wick up, that means we opened at this price 35 cents, 34. But there was a point where the price was driven up all the way to 36 cents, 87. That was a almost 4.5% move within the 30 minutes, right? It was driven all the way up and driven all the way down. So when the close is lower than the open, the candle is deemed red or bearish. Okay. So that means the price went all the way up and went all the way down and closed here. That's why I said the candle never closed above this downward trend line. Therefore, this trend is still valid, right? And because it's still valid, you'll see that this is a correct understanding of our trend breakout. Okay. Hopefully that makes sense. Again, if you guys don't ask questions, I would just assume everything makes sense to you and you know exactly what I'm talking about. But feel free to ask questions if you have any. Okay. So when we broke out of this, right? You see how when we broke out of the bear trend line, basically we start seeing a pretty nice impulsive move. Okay. So just simply from the breakout to the highest point, that was a almost a 9% move, which is decent, right? Depends on what leverage you're doing. If you're doing 20% leverage, that would have been about 180% move, right? So it's quite good. Anywho, let's come back down here. All right, so we already know a breakout happened. There's a few things we need to really consider, right? The very first thing is some sort of retest, okay? And if you actually been through one of my order block uh, class, you'll see that there is some sort of order block here. So I wouldn't be surprised if we actually came down and retested some sort of level along these lines, preferably right around the trend line and then have a rebound. What I do know is eventually these two trend lines will constitute some sort of breakout, either above or below. So I'm kind of paying attention to watch what's going to happen. Okay. So these are, again, the market structure. We have original point. We have our first high. We actually have two highs, but we'll use this one. We have our first low, higher high, higher low, and then we're ranging a little bit. So either we break above this downward trend line and then started to have another breakout, or we will reject right off the trend line and start to kind of work our way down to this trend line and see if we actually break out of this, right? So we'll see how it goes. Okay. Okay. So this is a 30-minute chart. So each candle is 30 minutes. We're now at the trend line. So you wouldn't be entering here to short it because you don't know if it's going to break above or you don't know it's going to reject, right? So be a little bit patient. Right now, you just wait. Second candle, the read is simple. In this 30 minutes, again, the open is right around the trend line, right? We got above the trend line, but we didn't close above. We came right back down. In fact, we came right back down lower, and then we come back up again, close right here. So what this candle is telling you is almost there's equal amount of pressure. People want to keep price lower than this point, and people want to basically pressure the buying side to go above this point, right? So you almost can kind of see there is some sort of a zone here based on this, right? So people down here wants to go higher, people up here wants to go lower, and based on this candle, it was a draw, right? Nobody's winning on this candle, meaning this is a terrible candle to entry, right? To enter because there's no significant confirmation. So we're waiting. Next candle is also very interesting. You see how we opened here, we went down below, and then we closed above. So this is the first candle that closed above the bearish trend line. Okay. Do you enter here? I hope not, because we haven't really have a solid confirmation. This is only the initial breakout. And if you trade here, like many times in the experience that I've done that, I realize that I've been trapped, right? So there's a lot of times people get trapped in situations like these. So I normally wait for some sort of confirmation. So the confirmation can go both ways. It can go up, down, and up. So that's one type of confirmation. Or what it can do is it can go up and up and up, right? So this is another confirmation, basically a very strong buying signal. Okay. In those cases, usually this type of candle will pair with large volume candles down below. So you can always kind of see what the candle large volume, the volume is suggesting, is telling you. Okay. So let's see what's happening. Okay. Boom. So this is exactly what I mean. And if you look at the candle volume here, let me move that for you. You see how we have decent size volume based on this continuation of up. So potentially I would enter around this point because this is the second candle close, right? So I would have entered some probably at this level. And the stop loss will be below the previous undecisive. Or if you want to just be here, it's fine too, right? So at this level, then basically the TP, it really depends on the previous performances, but potentially we can have our TP based on this wick, or it can be based on the previous swing highs, right? So the TP can also be here. If we were to really break out of this, so let's see how it goes, right? Again, this is not a trade that incorporates everything that we know. This is only a trade based on currently what we're looking at, right? So it can really go either way. Let's see how it goes. Okay, great. So this is what we consider a retest. We don't know whether or not the retest is successful because we haven't gotten a reaction after this. This is also the reason why I said sometimes being patient pays a little bit better. Because if we waited here, we can actually enter here instead. So we would have had a much better risk to reward ratio, right? So here we have 9, 1 to 9. Here we had like only 4. You see a big difference there. Okay. So if you waited a little bit more, you could have made a whole lot more just based on having a little bit more patience. Next candle. You see, this is a proper retest. So it comes back right to the trend line as is being respected very well. It went below but closed above, right? That means the trend line is holding, but that doesn't mean the next candle will hold, right? So you wouldn't also just jump in right here. All of these is not very significant confirmation. Okay. In Sherlock's terms, he likes to see some consolidation first before he really jumps in. But then he's also playing with much bigger portfolio, right? So if he makes a wrong move, he's losing like tens of thousands of dollars. So that's a very different concept. All right, let's see the next one. Okay. So you see how, again, I drew this trend line, in the past based on past data, but you see how the future respected almost down to a T, right? So we went down. Some people will freak out and get out of this position, but then we actually close above the trend line. So this is literally what we call a liquidity grab or squeeze, whatever you want to call it. Okay. So if the next candle is bullish and hopefully goes above the previous swing high, then that would be your solid confirmation, right? So I would add position based on here to here, right? So if it closed down below this area, potentially the previous, trend that I drew would then happen. So let's see. Okay. So over here, it tested this trend line and it didn't close below. It came right back down to this order block area. Okay, so you can see right now the trend is really the selling pressure is much higher. But then again, we have to close below here to really see a local change of character. So really the support resistance is right here. Okay, so let's see if it closed below it. Okay, so it's showing some buying pressure coming back in. Okay, so again, another fake out. Just want to remind you guys, fake out happens all the time, especially in lower time frames. So be very careful. Okay, undecisive, but now closing above trend line again. So now we're kind of like closing the gap in these two trend lines. Like it has to decide where it wants to go soon. So this is where you start paying a lot more attention. Okay, boom, nice candle, right? So this candle again went above the trend line and closed. Let's see the next one. Came right back down. Okay, next one. Again, close above this trend line. We're now literally being squeezed into a corner. It has to make a decision. Okay, we close above the trend line again. And it looks like the winning side is on the buying side. We'll see if that continues. But you see a lot of selling pressure, right? So over here is where, a lot of selling pressure is preventing this from going up. That means if we were to break out of this selling pressure, the move will probably be highly impulsive. So we'll see. Okay, so selling side is winning a little bit. But this is now a proper breakout, right? So you see how we kind of dance around this trend line for a while now, and now we basically came down and closed below, and we had a huge multiple white candle or red candle volume, right? So here, and we're right closing right around this area, right? Right around this previous change of character, we're closing above it. That means if the next candle were to jump below it, I'll probably jump in short, right? So this is where I would jump in short, right here, right? And if I'm scalping, I normally just do manual stop loss. Okay, so what you can do is potentially kind of predict that it's going to hit this trend line sometime, right? But the very first thing it's going to hit is probably going to hit around this area, which is the next swing low. But because of the change of character, this swing low is probably going to get breakthrough. So let's see. Okay. Jump right through it, you see? Right? But close above it, right? So this you can potentially take your TP1, TP2. But eventually, I think it's gonna hit this trend line, right? Because it's within this range. So let's see how it goes. Okay, already hit kind of my second target, right? And it'll probably continue to go. We do have to hit this block. So my next target will probably be around this block. If we really close below this overall like macro trend line, this trend line was based on a much longer time frame, then we have a real short, right? So I would probably have a much bigger position. Okay, we're closing above it. Read the situation real quick. This could potentially just be a proper correction, but then we might have some more impulse. Okay. So when you see actions like these, big fall, big up, usually is because the coin is somewhat manipulated. It also depends on kind of like their overall market cap. I don't know too much details about ZRX, so I won't comment too much. But normally you don't see these type of movement very often, right? But luckily, we already kind of took our profits here. So even we would break even here and then it kind of blow above here, you're still in profit. So it's not too bad. Continue. Okay. So the price now has like you see the volume difference. So at this level, and this is probably a level you want to keep in mind. This is a level where the buyer has literally undeniable um, intention of securing or what you would call a super strong support. So this will definitely be the level you want to mark on your chart because the next time it hits here, it will probably have some sort of reaction also, right? So this is just a very, very strong level. Okay, so now that it's closed above our trend line again, but this time is a proper close, right? So potentially we can look for a retest. And let me just take out this so it's not confusing. So we're looking at this trend line that it broke through. So either we're looking for a retest or we're looking at a continuation of this volume. So then the volume will actually looks like this, a higher candle in the same color as blue, right? So a candle that's basically higher than this. So let's see, that's what we get. And that is, right? So we have even more volume. So potentially what you can do is you can get in here because you have a very high significance, right, of potential uptrend, right? So you can maybe get in a small portion here. And let's see how it plays out. So the next target that we're supposedly going into, we're right now here. So the next target, let me go to just 1 hour real quick. So the next target will be right around this swing area. So I'll raise up to about here, right? And let's see if we actually get to hit that. All right. Next candle. Okay. Another great momentum as we coming up, but you can see our volume has died down, right? So potentially we're close to a reverse. And this is a great indication of reverse. So it could potentially be ranging around this area. So if I just kind of hide this real quick. It can potentially just be ranging because you never really go just straight up. But if we're just kind of ranging in this area, we can actually go up again or we can range and go down. So this is the point where you would definitely take some profit off the table because you can go either way, right? So let's see which way he wants to go next. Right. That's why I say you want to take some profit off the table here because based on the volume, based on the way the candle is showing you, right, we kind of don't have a clear idea where it's going. Now, the next point of entry is we're waiting for some sort of retest on this trend line based on the market structure again, because we already broke through the previous swing highs, right? So if you look at a little bit more on a macro scale, right? So you have your original point, first high, first low, higher high, higher low. We now have, let me just take out these. So if you're looking at the market structure, we have the next higher high. But even though from this point, our next higher low is right here, but we actually go down all the way down here, right? But now we have this point. So even though we came all the way down here, we have now established a new higher high. So that could mean basically our bull trend, local bull trend is continuing as long as we can establish a new higher low. So the next new higher low will be above this area. So we're really hoping that we can close above this green line right here. But it could also potentially break through here. Then this higher high wouldn't mean as much, right? Because it broke through both the long-term bear trend line, is broke through all the swing lows. So then, we kind of really want to watch what the market is doing. So I wouldn't really enter until we have a confirmation of a successful retest. But if we do have a successful retest, it could really mean this is going to be pretty decently bullish, right? Another way you can look at it is also use the fib retracement to see potentially how far it's going to go back. 0.5 is always a good point to watch out for. It could potentially just hit the 382 and rebound from there. It could. It's just a shallow response. Or it can go to the deep pocket, which then really kind of retest the whole, theory about this previous swing low. So we'll see how it plays out. But I'm just going to place my trade right around the 50 line and see if it hits, right? So that's my kind of guess. Okay, so it hits the 50, right exactly 50, and then basically bounce above the trend line. You guys see that? So that means, again, trend line is still being respected. As long as we don't close below, the trend line retest is still considered successful. So the next candle is very crucial. If the next candle actually closed below this trend line, potentially closed below this support resistance, then we have a confirmed deviation, meaning that this whole peak is a fake out. Okay. But if we do close above it and we break through this point, the swing high, so if we break through this red line, then yeah, we're in business for the bull trend. So in this case, that has now considered this the whole breakout as a fake out, right? Because now we close below here. So this is what I mean by, this coin seems very highly manipulated just because the way it kind of do things is just, it doesn't follow a very specific logic, or it doesn't follow a very specific way. And primarily the reason why I don't trade, especially when I do scalp, I don't trade outside of Bitcoin because Bitcoin has a much higher market cap. The manipulation is a little bit more difficult. But I think over here we demonstrated enough to kind of show you, the market structure and the importance of understanding the trend lines, right? But you can see that, anytime when you do this, it can really go either way. That's why it's important to learn the concept and the management of how to profit on both sides. Okay. If you're wondering how to do that, I actually had a video I believe it was the last live stream where I show how you can profit on both sides. Okay. So here on out, what I'll do is for the rest of the session, if you have questions, you can ask. But what I'll do is I'll do a live scalp trading based on the BTC chart on a 1 minute chart. And I've been doing that daily, right? Showing pretty nice returns. So if you want to stick around and see how I use what I just taught you in action, right, in real lifetime play, you can stick around. But if you don't have any questions, you don't want to stick around, you can actually leave, right? This is pretty much the end of today's live stream. Thank you for coming. And Derek, so basically high cap coins have high chance to follow TN. Well, I wouldn't necessarily say that, but high cap coins requires a lot more capital, a lot more skin in the game for them to be able to manipulate something, right? So if they can't really manipulate something as easily, usually TA has a little bit more respect. Because TA is based on, the concept of understanding how the market moves and the reason behind all those moves and prices. But nobody can really predict as a manipulation. So a manipulation is really an impulse that someone does something that is supposedly more than, let's say, 20, 30% of the market total cap. And they simply did that and either drive fear or FOMO to cause the market to move a certain way suddenly. It's kind of like when before the ETF was approved, there was a fake news or some sort of false, some type of fraud comment about how ETF was denied. And then we had a huge dump. Remember that? So those type of manipulation happens a lot more often in low cap markets for whatever reason that they're doing. All right, so be a little bit more careful. All right, Dub. Gray boxes you drew are those supply zones. Well, I had a couple of streams in the past about supply and demand zones and order blocks, Dub. So the gray box usually I draw is basically an area where I believe the liquidity, or in this case, would be an order block. Anything below 1 hour, I usually don't use the wicks. I just use the candle bodies, right? So this is kind of what I would be looking at. So you should get some sort of reaction here. So, okay, well, in fact, we actually never even broke down to this order block, but it did tap into the wick in this case, right? So if you expand that to the wicks, it did tap into the order block of that wick. So the gray box, usually I'm drawing just certain zones that I'm looking out for. Supposedly there's some liquidity. So we're visiting the box again. We haven't really broke the half point, so potentially this box is still useful. In this case, we're now 75% through, so I wouldn't be surprised if we have a reaction or it can go through again. So we did have a reaction, right? We went up. So this reaction, even though small, it was still about a 3% reaction, right? So it's still decent for this time frame. And then now we started to return, right? So, but this order block, since it's tapped through 50%, is considered depleted, right? If the order block or supply zone is at a very significant area, then I wouldn't close out the liquidity pocket. I would continue to kind of elaborate and use that order block because sometimes it can go up and retest, calm down. Oops, where'd it go? You can calm down and actually use the order block again to retest, right? So sometimes when it's at a significant area, it can be used on both sides multiple times even afterwards. So when you're saying when is it invalidated, it really depends on what location the order block is. If it's in an insignificant area, then once it's tapped through halfway, then it's invalidated. If it's in a significant area, you probably just keep using it. Yeah, actually, I did that if you were on time, Derek. That's the first thing I did. Hold on. I'm just joking. I'm happy you're here, bro. All right, so USDT.dominance. So really, currently what we're looking at in terms of the 4-hour chart, I'll just kind of briefly go through this because some people already went through it. We have a very significant trend line down here, right? Great trend line, but we're still in the original point, right? So we never really broke below our bear trend for the USDT, that dominance. So you have your initial point, first high, first low, higher high. And currently we're looking at the higher low to be established on or above the trend line. If we're looking at a Fibonacci retracement, we have a support resistance level from the previous swing high. We also have a 786, which is a deep retrace. If we were to react from this point and stay above the trend line, that means more dump is coming. So the current comfort of a small pump is not going to be significant, right? So it probably takes some profit if you buy something that recently you bought something low. You can definitely take some profit right now because potentially we have more dump coming. Over here, we have a very significant point, 618 fib retrace up here, and that's based on a much longer time frame. So I'm thinking that if we were to kind of have a conclusion for this current dump, that's probably going to be the level. So we'll probably hit that first as our final dump, and then we'll probably start breaking through this trend line and then above and below. And eventually we hit this red stop loss that I put here for the previous demand zone. If we were to close below here, then it's Valhalla, right? We're expecting everything to start pumping. Order block and demand zone, supply zones is really personal preference, whatever you want to call it. They're really just pockets of liquidity. You can identify them differently. You can either identify them based on the candle, the way the candle looks, or the way of consolidation is. But what it is just identifying basically pockets of liquidity. That's all it is. So you can call it order block, you can call it zones, call it whatever you want. It's liquidity, right? You just kind of identify them differently. All right, cool. So again, if you have no interest to see me how to scalp, you're free to go. It's over. But if you want to kind of hang around, because I do have a daily, kind of like a daily goal of $500 to about $1,000. It usually takes about 30 minutes to about an hour. I will be doing the scalp live. Okay. So feel free to stick around, hang out, ask questions. I'm gonna put on some music so we can all just chill and relax. But feel free to type in the questions if you have any, huh? So when it comes to scalping, the very first thing I do is I will click on the 1 day time frame. But this is not a time frame, but 1 day area. So based on a 1 minute chart, 1 day meaning that this entire string area consists of one whole day, right? So what I'll do is I'll use the anchor volume tool and basically map out where the volume is at, right? So then you have your point of interest. So during this entire day, we have the most volume here. And then you have your low and high price action. So that tells you we have already broken high. We're now above the EMA 200. So we're currently bullish, at least in the local area out of the day. So that gives you a very quick idea about, okay, where you're standing, right? So in scalping, the very first thing you need to kind of identify is, okay, are we going up or are we going down, right? This is not an indicator. This is actually a tool on your tool set, right? 1, 2, 3, 4, 5. Fifth one down is called the anchored volume profile. right? So it's anchored at whatever you chose the time frame to be. Okay. So now we're now above 200. My Y is the white line is EMA 10. The pink line is EMA 21. So anytime it crosses, usually means that there's some sort of a reaction, right? So when it crosses up, it's going to go up. Crosses down, it's going to go down, right? Usually. Okay. So I wouldn't trade directly based off that, but anytime you see a crazy impulse, you see that it's going to cross. Okay. So that's one good way to kind of see how things are. I always keep my 200 on, just, as a reference how we are doing. Okay. So now we have like this angle, right? This little kind of like bowl shape, right? So the first thing I need to do is identify a trend line I can use, right? So here you can kind of see a little bit of consolidation, even though we had a crazy impulse here. So if I draw a box right here, so this is like the area of consolidation, which then, this will probably be the point where then I start trying to pick out a trend line. So I don't see anything very significant here, but I do see a potential trend line. Remember, the trend line we use in the lower time frame has to be based on candles, not based on wicks, right? Because wicks is too insignificant. So let's find a trend line that works. It's a little bit difficult simply because, this price action is very difficult to really predict. So in this case, I probably can't use a trend line from this area. Um, yeah, I don't see anything that would suggest anything solid. So instead of trend line here, I'll probably just use EMA. I'll probably turn on my EMA 90 as kind of like a secondary, this is a 99 or 100 as a secondary potential dynamic EMA or dynamic trend support resistance. Here we have an obvious order block. And this is a strong one simply because we have it range a little bit and decided to pull out. So this is what I consider, a decent order block. So then we have it here. Again, we're now showing trends. Draw your trends. You have your low, high. I'm sorry, your original point, high, low. And then we're ranging. So the next one has to pass in order for this bull trend to continue. Is we need to make sure we basically close above this area. So right here, we have a very significant support. It has to close above it to reach the next higher high. You guys see that? Right? Original point, high, low, higher high. Or we need to close below this area with the same concept in order for this to now be bear. So I'm really just waiting. That's why I said a lot of times scalping is about waiting, right? So your zone is very clear. From here to here, this is the area I'm waiting for it to either show a breakout from here or break up from here, right? So, I'm just kind of waiting for it to happen. I'm not going to enter trades in the middle. It doesn't make any sense. So basically, I have my market structure really clearly defined, and now I'm just waiting. That's why I said it's very hard to do this, in a lecture, because most of the time you just be waiting, That's why I do this daily. So if you guys want to kind of see how I scalp in action, maybe learn something, ask questions, this is a good time to, just hang out because we're just waiting for things to happen. All right, let's see. Can you guys hear the music? You can't? Oh, really? Oh, interesting. How about this? Let me see if I can share my screen. Can you guys hear the music now? Okay, cool. But then my screen is incredibly large, right? Yeah, because I have a 49-inch widescreen. So I'm not sure if this is the best for you guys. Is it too small for you or is it still doable? What do you guys think? Do you prefer the previous display or this one? Oh, so it's more native for you, Doug. Good. Previous one? Okay. Let me go back. Well, once you guys make some money, definitely invest in a good screen. Because a lot of times, going back and forth scrolling to find the trend lines annoying. Hey, how come I can't share? What's going on? Hold on. Let me go back to. Huh. My Discord is acting funny. There we go. How about now? What do you think BTC will go down to 50K and just pump? I mean, it's hard to say. If you look at the BTC right now, go to daily. If you're currently looking at the BTC, we have a pretty obvious, zone right here. Consolidation sits right at 53 to about 50. And the EMA 200 is currently right in between this zone. So it's highly potential. If you look at the structure as we kind of taught today, original point, first low, first high, we have established a lower low, right? So if we don't close above here, if we don't close above the previous high, then that means we have established a lower high. That means the bear structure continues, right? And in that case, we'll probably start seeing even lower lows, right? Could potentially be 53K as a potential resistance or support in that case, or it could be the 50K. But if we close below here and retest it here, then yeah, we can actually see it go as low as, the next consolidated area is about the 53K zone. I personally don't think so because, everything is kind of confluence for BTC to start pumping with the halving and everything, right? And there's no reason after all those amazing news and, all the updates that we supposed to break the EMA 200. When you're on the daily chart, EMA 200 simply means, it's an average of the previous 200 candles, right? So 200 days ago, we don't really have the ETF approval. We don't have a lot of the ETF money. Um, it just there's really no reason for us to break below the ETF, the EMA 200, in my opinion. And we have a very, very strong zone at this level. So don't, I don't doubt that there's a potential we can actually tap into this zone, potentially grab some liquidity here to go back up. So that's why, if you guys follow my signals, a lot of my signal is quite deep, right? Because I am actually anticipating, Bitcoin to somehow tap into the liquidity here and then before it goes back up. So that's my thesis. Again, can't predict everything accurately. Most of the time, what you're trying to do is you're trying to identify what the market is currently doing and make correct, and rational decisions to make sure, everything is for a reason, right? So you see how we have the EMA 100 sitting exactly at the swing low to kind of work as a potential support. So that means even if the price were to come down here, we have many reasons to believe that it'll rebound. So this could potentially be that case, right? So we'll see how it goes. If you're a spot trader, right now would not be a bad idea to get some DCA in. You probably could have got some at 56K, just I think a day ago or something. So if you're a spot trader, you don't really worry about stop loss. You're just trying your best to collect as many coins as reasonably priced as possible. And you'll always win, right? Because you don't anticipate BTC going down all the way to zero. $10,000 in the account. You don't have to do 10,000. It could be 1,000, whatever it is, right? So the results per day, my goal is 500 to 1,000. For you, just be 50 to $100 if you kind of lose a zero here, right? So it's all proportional. The idea is you want to be very clear about what proportion you're using. All right, so let's take a look at the current price reaction. We currently have a very obvious kind of rise, and this would then constitute a pretty decent trend line. So I'm going to draw it right here to here. So it seems like a decent trend line has been formed. Again, you only use candle bodies when it goes to low time frame. You can actually extend your trend line to the left to see whether or not it constitutes or confluences with previous points, right? So then, obviously confluence with that. Let's see if we go back. Does it have any other significant points? And we do have some. So I guess that kind of that validates it, right? So if you look at this trend line, then we have multiple touches. So I would think this trend line is a valid one. Okay. So once you have a trend line established, that makes you feel a lot better. Okay, so the next one we're trying to break here is at this point. Still not constitute a trade here. This was a order block that was just broken through, right? So we broke that. Depends on you thinking you're overall bullish or bearish. Since I'm overall bullish, if you're really bored, you can potentially enter here and simply just DCA your way down. You can DCA here, you can DCA here, right? So then potentially you can then take profit near the top. You can do that. It depends on what strategy you're taking. For me, you see how it now started rebounding. So, right? Okay, we do have a EMA cross though. So you see how the white line is just about to cross with the pink. So that usually is a sign of bullish, even though the candle is, suggesting there's a lot of resistance at this level. So we'll see. The white is EMA 10. The pink is EMA 21. So you're not off. You're not far off. Pretty much that. But you see how we have consistent, bullish candle. That means we're probably going to have some sort of impulse before we actually go up. So even though we crossed here, we can potentially enter here. And just for the sake of education, I'll enter here. And then I'll show you guys that portfolio management is more important than being right? So I have it here. I entered 5 units of 0.1 BTC. And it's now dancing on this order block. So if it comes down lower, I will probably add more positions. But where you add position is very important, right? So that's why I said I would probably have waited because, this could potentially be, yeah, that's kind of what I meant, right? So it came down to the EMA lines, which is usually a good point to add a position. But now we're kind of like deciding where we want to go. But you guys see how when I add position, my entry went from here to here, right? And that's because now I have an overall lower entry. Okay. So now, even though I'm $400 in the hole, this is what you call drawdown. Drawdown is basically unrealized, gain or loss. Well, drawdown is usually loss. So it's unrealized loss, right? You see how when you're scalping, making one impulsive move or making one, impatient move, this can happen literally at any second. That's why patience is super important, right? But now that we're at this level, I do feel, more comfortable adding another position as we're getting near this trend line. So I am going to add one more. And my TP point would be then the swing high, because I'm pretty sure we're gonna have to close above it, right? So my ideal TP would be here, which if we do go back up and hit that, it would constitute a profit of $768, right? But that's assuming this trend will hold this trend line and reverse. So we'll see how it goes. But based on the volume, the selling pressure is still very high. We're now hitting the 100, right? We're now hitting the 100 EMA, and we have a significant swing low. So if we break below this, then potentially I'll stop loss. But if we come back here, then we're still fine. Obviously, if this is real money, you wouldn't be this calm, right? So you want to make sure you practice enough where you can predict the market, or at least you can read the market correctly, and very confidently before you want to jump in to really spend your money do scalping. Scalping is so much more risky. This candle pattern is usually very bearish, right? So that means we'll probably still have a pretty significant downward momentum. But I am not overall too scared for one big reason is because we are in general in an uptrend, right? I am concerned when we break below this point though, because this is pretty much the lowest point of this ranging area. So if it does break below this point, I would start doubting a few things, right? But until then, they can really kind of dance around. I'm not too worried about it. So let's see what it wants to do. I really hope this closed blue. 1 second, 0. So it closed kind of doji. So we'll kind of see. Okay. So doji just indecisive, right? So you see how this trend line kind of is holding a bit, I guess? It's holding and it's not. So right now it's kind of like breaking through, which is my bet is in this one, right? In this support resistance. So now we're kind of dancing around the EMA 100. I would most likely add another position if we hit the stop support resistance here to bring the overall entry down. Looks like the EMA 100 is kind of holding nicely, but you can't really say that until we close above it, So a couple more seconds, we'll close, and we did close. Now we're showing. Well, no. You can't really short it because I'm in the long position. So the only way you can short it is if you reverse your position, which then you would then first inherently kind of realize all the loss, and then you would have the same amount of position going lower. So you can't really short here. But if you're saying that if I didn't have this position, would I short here? The answer is no still, right? Because we're in the overall bull trend. This is a very local bear momentum. So when you have an overall bull trend, you never want to trade against the overall bull trend. That's why I was comfortable setting up a long here, even though I think that was a little premature. I kind of mentioned it before I got in, right? So I said I go in for the purpose of education, right? Because I think, overall, this is not a good spot to get in. But here would be a good spot to get in. At this support resistance level, could be a good spot to get in. Potentially, we have another support resistance here, right? That can actually come down and have some sort of reaction. If you really want to look at it, we can also pull out a fib. And there is a 618 right here, which is down to this wick. Potentially, we'll have a response. Potentially, we have a 786, right? So this is another great level where it can potentially kind of see some sort of resistance, support, I'm sorry, for a reaction, right? So what it can do is it can actually potentially go down all the way down here and then maybe start rebounding from here and potentially up to like maybe this TP point. So that's what I think it can potentially do if it doesn't hold at this support resistance line. Well, this is what we call drawdown, right? So I was explaining that, Termy. So yeah, I know it shows like negative 2,000 some dollars right now, right? But as you continue to DCA down, you will also lower your entry, where then the next, correction wave, potentially you can break even. That's why I said a lot of times being right is not as important as proper management. So if you manage your trade correctly, even though it says minus a couple thousand, it's not the end of the world for you. What you don't want to see is, minus your entire balance, right? So if it's minus 10,000, then really what you have is you have liquidated yourself, right? So in a real case, in a real life scenario, you can only afford up to $10,000 of drawdown. And the number of how quickly that goes to that is based on your leverage, right? So when you have a high leverage trade, then it's very easy to actually, get liquidated when you're wrong. But in this case, how it's dancing right on the support resistance line that I said was very strong. So it can really go either way at this point, right? This could be just a deviation or just a fake out from this trend line. Yes, I'm DCAing because I believe the overall macro meaning the overall scale of the market is currently on a very obvious bull trend, right? So this is a very local bear momentum. So if you see the bear momentum on a very local level and you decide to short, what you're doing is you're playing against the market, and that's never smart, right? Because in the macro scale, we're currently going up. And you can also look at the USDT dot dominance for, a quick example. Because the USDT dot dominance right now at a 4 hour is also showing significant bear momentum. And this bear is it's a opposite indicator, right? So that means it's very bullish right now, even for the USDT dot dominance. And it'll probably go all the way down till we hit either this level, the 99, or So there's a lot of room for the market to go long right now. You see how, just a moments away. Hold on, let me just go back to 1 minute. So you see how we're kind of still dancing around the support resistance? Looks like it's trying to break below. And it can. We have about 16 seconds to find out. If this is a completed and confirmed retest, then very likely you'll probably go to the next level, right? Which is right around this area. Or it could actually have a reaction right at 618. So we'll see how it goes. This is why you don't want to add position, crazily, right? You can't just add in a single candle like 2, 3, 4, 5, 6. You can't be adding positions in a single candle like crazy. You want to spread them out. You want to add them rationally. You want to add them strategically. This is what I meant by management. If you have proper management, it's very hard for you to lose out on the trade. So this trend line is no longer useful because it's really broken. So let's just take it out. So now we're kind of testing. The first level of testing is 618. So let's see if 618 holds. And 1 minute charts, you would think 1 minute chart you'd be trading, ins and outs like almost every few seconds. But even at a 1 minute chart, sometimes you have to wait like minutes, like 10, 15, 30 minutes, an hour, just for the trade to play out. I remember the first time I did live stream where a little bit of ego came out and I was trading to prove myself. And, I made some really terrible mistakes and decisions. But the trade in the end, ended up winning. But that was about an hour after the live stream. So I basically set my TPs and I closed my computer. I turned it off. And I woke up in the morning, everything hit, right? So even for 1 minute chart, sometimes it takes, hours. All right. So we had a pretty significant reaction here, but then it was immediately pushed down. So let's see if we close above it. Oh, we don't. Okay. So the price wants to go down some more. It's rejected by the EMA 100. You see, every time you break through and close below or above, that becomes either support or resistance. Okay, here we go. It's going to try again. Let me enlarge a little bit for you guys. Yeah, these type of candle action usually is not very bullish, right? Because the price is trying to go up, but then it got pushed back down. That means the selling pressure is also very high up here. But when you have candle body start growing, that means the buying pressure is now winning over the candle pressure. So that's a very good sign. Okay. So let's see if it continues to grow. When it closes above the 21 again, I'll probably add another position. So you don't add position, you don't just simply DCA when it gets lower, you guys. I think that's a very common wrong interpretation of DCA. You also add DCA when, the trend is now showing very significant momentum or a confirmation of where it's going. So the buying pressure is now overtaking the selling pressure is now overtaking the buying pressure again. But we're still kind of keeping along these line, right? This line right here. So are we going to go to 618? So one of the things you can look at if you start using paper trade as well is you can look at the current position. So there's 15 of the 0.1 Bitcoin price. So 15 is not huge really for a $10,000 account. Yeah, most people don't have the patience to wait out. So they just bounce. That's good. This is exactly what ranging means, you guys. Consolidation, right? It's ranging around along this line to support resistance. So that means the next time it breaks out, the more it ranges, the when it breaks out, the more explosive it gets. Here is probably a great note to take. You see how this line right here, the EMA 10 was just about to cross over the 21, and then it decided, nah, it's not going to cross, and it crossed downwards. So this is exactly what a fake out looks like. So if you're ever wondering how you can see a fake out, you can actually use the EMA lines to see them. That's why I said, when I say, okay, here is potentially a good entry, I said it's probably not a good time because it's too early. That's what I meant. We have just closed above 91, the 99, and then we close below it again. It's now kind of flat. This is when it's kind of boring. Well, I have a feeling we'll pump soon or we'll dump soon. It's just, I have a feeling this range is about over. So if my goal is only $1,000 at 15 positions, if I move my TP down low, I can actually make $1,300, almost 1,400, just based on the previous swing high, right? And if I didn't want to be greedy, I just want to, close this deal, then very much so I can just, wait for the current price to raise about 0.4 of a percent, and I can be able to make that. So let's see if it wants to go up. First time retested to 21, which is a good sign, right? Because you can see all the retest is retesting higher and higher levels. We're not retesting lower and lower. That means this position here, this line here is holding well. And if it's holding well and we can sustain our buying pressure, then eventually we'll break through these test zones. And once we break through, we'll literally have a breakout. But if we close below this zone, that means the selling pressure has won, right? And we have exhausted all the liquidity down here. So we'll see what the market wants to do. Well, it's backing out again, right? This line is really holding well. 2 seconds. One. See how the next candle will do. Yeah. So buyer has held. Yeah. What do you want to do? The EMA is showing a local bear though, right? So now it's dropping below. We're about to hit the 618. Yeah, it's breaking. No, it's not. Touched it. Okay. You see how there was a huge selling volume here, but the price didn't really move much. Usually that means a lot of resistance. So it seems like over here, this ranging area is a fair value gap. So we really have to close above this area for me to feel more confident about adding more positions. But if we close above this candle, forming a positive or bullish order block, this is a great sign of a reversal. So we have about 3 seconds to see if we close above it, and we don't. Okay, so that potentially could mean more downward momentum. So this blue has to close above this candle in order to be a bullish order block. So the seller is working real hard to dump it. So once it breaks above this bearish order block, I'll probably add more positions. So it has to close above the top of the block. And now the new line that's holding is the 618, which we also tapped into in the previous wick. Our last line of defense is probably the EMA. But we're too early to tell, It's interesting how this block sits right at this swing low too. Okay, showing signs of breaking through the 618 or closing back up. So this candle, the hammer, is usually a good sign because they try to push the price down, but the buyer pressure pushes back pretty well. But not followed by this kind of candle. So that wouldn't make sense. Again, buyer pushing back. Now we're at a $4,000 drawdown. This is where most new traders will freak out and stop loss. Or, they would they would stop the trade and take the loss. I used to do that as well. And then I'll start over, trying to make more than 5,000 for the day, which I've done multiple times. But now I've learned to be patient because the price can really just respawn or rebound. And this 1 minute graph looks like the recent Bitcoin too, right? Where then we kind of been ranging around a certain hollow area and then we never really broke below, right? And this will be the 53,000. It looks almost identical to what our current Bitcoin price is, but this is just a 1 minute chart. Very interesting. All right, so price is finally showing momentum up. This is what I mean by patience, right? And not freak out. So this is really good training for you to train your psychology, to train your resilience to, pressure and stress. I sound chill. It's because I've done quite a few of these already. I'm doing it daily. I'm being recording daily about, my performance, all the mistakes I make. And that's, what I'm trying to accomplish. So the moment I break out or close above these lines, I will add positions. Yeah, patience is definitely rewarded. Okay, so this is a great sign of momentum. So I will add a position here. And I will lower my TP down to the order block here. That would still constitute a $2,000 win, right? You see, this rebound is at a 618 exactly. So when people say fibs don't make any sense, consider a fib is a great indicator about kind of like where most people are placing their trades. So it still has some rules to it, right? Some merits to it. I would still pay attention to it. It would be amazing if we can close above this order block. We have about 4 seconds left. And we did. So we closed above it. There's really no reason to go all the way down. If it does, is a retest. Or just the chart wants to slap my face on the live stream. But there's really no reason for it to go down. The only potential outcome is that we're forming a new trend, right? So we have the original point, low, high, lower, low, right? And potentially lower, high. That is the only explanation about why this then would break below here. But that's assuming we're in a overall downtrend. Currently, we're suggesting we're not in a low overall downtrend. So I'm not buying into that thesis, right? So my thesis is still we're going to go up. We also have a new order block here, bullish order block that was formed. So before we go below here, we still have quite a bit of liquidity here. So this could just potentially be a consolidation before we move up. So we'll see. But when you have close above the previous ranging, that means the price usually means that we're ready to kind of take off from the previous range. So if we can close above, and we have the previous low, where we should be bullish. So we'll see. I have a pretty high confidence we'll hit this TP in the next few minutes. Let's see how it works. I probably wouldn't. If you use the same ratio, I probably would not do more than 20 positions or 20 quantity units per trade, because 20 you can imagine is pretty high leverage. So either direction, the drawdown can be quite significant. You want waiting sucks sometimes. That's why I prefer to play calm music. Too bad you guys can't hear it, but I have the chill music in the background, just keeping me sane. If you want to check, you can actually use retracement here to see what is going on, right? So you see this red wick almost close at the 382, right? So basically it's a point of where a potential rebound could be. So a lot of times when you don't know or not sure, you can always use retracement to see what the price is, what the heck they're doing. So potentially this would then be a rebound. Hopefully just hit the TP and we can close the night. We're almost at break even. There's really not that much between break even to the TP point. So if it really does go up, it'll probably go quick. And we're forming a new structure. So our initial low, we have a new high, a new low. We have just formed a new higher high. So as long as we're closing above here, or as long as we don't go below here, we're still good. We're still in the bull trend. And we have formed a new bullish order block here as well, right? So all of the activities is currently showing bullish. And you see the price actually came down almost to the same bull order block. So let's keep going. Almost done. We just need more volume. Okay, good. If we close above this line, this candle body, we have formed a new order block. And of course, it decides to come down. Couple more seconds. So we are closing bullish. So we have just formed yet another bullish order block. So sometimes when you kind of watch the price action develop, right? You'll see whether it's forming, bullish order blocks or bullish demands, or it's basically forming, bearish order blocks or bearish demands, right? So you can definitely watch out for these things to confirm whether or not the direction is going where you want to go. And finally, we broke even for a minute there, not even a couple seconds. But we have good momentum, good volume. I'm still going to stand by my take profit because I do think we're going to blow through it. Pretty confident about blowing through it. So we'll see. Have a little bit more patience. Yeah, but if Termi was still here, he will realize the reason behind what I said, that management is more important than prediction, right? So if you can manage your trades correctly with the proper patience, proper DCA, it's very hard to actually lose money if you have real good proper management. And if you kind of pay attention to your margin level as well. If you want, you can always de-risk, right? You can always, when it comes up, you can sell a couple of positions to de-risk. You don't have to. As you de-risk, you're also lowering your TP. And we're really not that far away, you guys. From my break even to this is only like 0.12%. So if it goes down, just tap into the liquidity at these order blocks, and you should actually rebound. And here we have a confirmed, EMA cross. So that means right now the EMA 10 should work as a pretty solid resistance. I'm support, sorry. So you should support. See how it bounce off? You should support it. Right? So it's supporting the price as a dynamic range. But it doesn't always act as a support. It only acts as a support when it has a proper crossover. So pay attention to when it crossed. But then of course, price can decide whatever it wants to do. So 3 seconds. Okay, next candle. We do have a bearish order block here we have to break through. But it's a small one, so I'm not too concerned. But you see we have a reaction right now. And we'll probably have another reaction near break even. But if we close above this candle, we have made another order block, bullish order block right on the EMA line, which is not really a bad thing to have. Six seconds. 2, 1. Next candle. Okay. Additional order block formed. Okay, it decides to go down. So this new support resistance we drawn from the previous swing low becomes a pretty strong support, right? So you see how we have a huge wick, and that's a good sign that we tap into the liquidity here. You can see it as a retest if you want, or it simply is grabbing liquidity. So supposedly it can go up from here, hopefully. If not, we still have the 100 EMA right down below. So we closed above EMA 10 again. And we're kind of just ranging a little bit. But we somehow have kind of accomplished a higher high. And that is now a higher low. So this is considered rather bullish. And we are bullish. For percent of future portfolio. So for my futures trading, normally I only do about 10% of my total portfolio. So I wouldn't be risking too much in this because it can really turn on you really quickly. So when they say only basically trade the money you're willing to lose, that is 100% true for these type of scalping. So you want to kind of make sure the positions you're in is you're okay with losing everything. Yeah, so majority of my efforts are still in spot, right? So I still have a lot of my efforts in spot. Because the overall trend of the market is pretty apparent after ETF and everything is approved, first time in the many years of Bitcoin history. It just makes more sense that, the price is going to increase over time. So I don't really see any reason why BTC would have a catastrophic fall or some sort of dump. Right now, just correction and manipulation that's going on. I have a feeling the next time we have a decent rebound, we'll probably hit our TP. So we're tapping into our order block again. Come on, our TP is not that far away. Let's end this. Just hit it and we'll call it night. Okay. There's a lot of resistance here, huh? What is going on here? So when you see a lot of resistance multiple times, what you can do is draw a line and go back and see what is going on. Okay. So I don't see anything significant. It's having a lot of trouble. Yeah. It's probably this is probably a zone. So if I really want to, this will probably be a supply zone. It shouldn't take that much to break through, though. It's not a big one. Okay. But the consolidation is very bullish, in my opinion, right? So we're consolidating, but we're consolidating up. So we're kind of getting closer and closer to our TP. And they always do the opposite when you say something, of course. I should just shut up. Market tend to do that, huh? They hear you. Oh, you want it long? Okay, I'm going to short it. Okay. So it's retesting EMA 21. In any extent, we should have a higher high. If not to the TP, it would be somewhere definitely above this area, right? And there's no sign of closing the gap between 10 and 21. That means we're not showing any bearish momentum. So I'm still very confident that the price is going to basically form a new higher high based on EMA. So if we close above this candle close, right, in the next 20 some seconds, we would then have established another bullish order block, which is another great sign that, the price is eventually crawling its way up. Should have been a little bit faster, but, can't really choose your timing. Looks like it's going to close above, and it does. Okay, good. So we have formed a new bullish order block. Here we go. Are we going to hit the TP now? And we're now entering this zone. Let me move this. Okay, go, go, go. That was like gambling. That was like, oh, let's go. My horse gotta win. Come on. Dub, I have no doubt this is gonna hit TP. Trust me. I'm just waiting for it to happen so I can show you guys as a complete scalp, from start to finish. But usually, when I'm so confident about this hitting TP, I probably just close the computer, turn it off, and just sleep and wake up, check out what happens. So you see how it's tapping into this zone now, trying to get the liquidity out of this zone? This was the previous supply order block. I should have made it pink. Right, this was a previous, bearish order block. I mean, we're already at 1,000, almost 200, right? So we pretty much hit our, daily goals already. But just for the sake of demonstration, I'll allow it, not allow, but I'll kind of give it time to hit the TP. And we're so close. Usually at this, oh, it's just hit. Never mind. I'll just shut up. So you see how it hits the TP and then had a reaction? That tells you, it's really two sides of the coin you guys need to learn, right? You can't just learn when to enter. You also need to learn when to take profit. Because without learning or knowing how to take profit, you're almost never going to become profitable, right? So definitely pay attention on that as well, right? All right, so I'm glad I just showed you guys without, liquidating your account, how to make 2,000, almost $300 in, let's see how long it took. So from finishing the class, the first arrow of entry is here. That was when I do the demonstration. So here is total time took about 43 minutes, right? Not too bad. Making about $2,300 in 43 minutes. All right. So this can be repeated, you guys. This is not me boasting skills or boasting what I know or, this is not about showing off. This is about showing you what's possible. Okay. Now, the size of the account I mentioned already, the account portfolio is $10,000. So that's basically what you use to start. In fact, I reset this account every single day. So in real life, when I make this amount, I would take out the $2,300 as profit. And the next day, I would start with $10,000 again until I feel more confident or until my overall net profit has, not net profit, but net worth has increased to a point where I'm willing to risk more. Then I probably increase the total account size on a daily basis because I do trade and scalp daily, right? So once you get to the point where you decide what's comfortable for you, you should kind of stay with that. But the way I place my trades is every trade is a 5 quantity of a 0.1 BTC size, right? So 0.1 of BTC times 5, that's each of my trade. It sounds pretty big, but when you're in the future leverage environment, it's actually not that bad. Okay. So you see how the price continues to go up. At this point, you can think, well, I should probably get in and trade some more. I highly recommend once you hit your target for the day, you should just rest. Because sometimes when you get into hyper trading or too much trading, or sometimes you get in over your head, that's when you can lose potentially everything you have made so far. So I wouldn't really do that, right? Even though it's showing pretty strong signs of bullish momentum. But market never sleeps, right? Tomorrow is going to be there. The day after is going to be there. So you're not in a rush to really, make a whole bunch. Let me share with you guys one last thing before you go. So you kind of know what I've been doing, and then maybe you can kind of do something similar, right? So this is hopefully to give you some educational value. So I've been tracking my trades. All right. So let me just share with you what that looks like. Okay.